Hello traders. In this particular video, we are going to be talking about the stochastic oscillator. The stochastic oscillator works with the principle of overbought and oversold levels. When using the stochastic oscillator to trade, these are two key levels to look out for. This is the overbought level and this is the oversold level. Now, the overbought level is usually used to show that an asset has been buying for long. There has been bullish momentum. And then when the stochastic enters the overbought level, it usually shows that there could be an end to that bullish momentum. On the other hand, when the stochastic enters an oversold level after a period of the asset selling, it shows that there could be an end to the selling momentum. Now, how do you use the stochastic oscillator to trade? All you need to do is to watch out for a crossover. Now, when the main line, you can just use the default settings for the stochastic oscillator. Now, when the main line, which is the green line, crosses above the red line, which is the signal line, and together they both point upwards. Together they both point upwards. It signifies that a buy move is about to happen. So that is a buy signal. Whenever the green line or whenever the main line cuts above the signal line and both of them point upwards, it signifies that a buy move is about to happen. So using this as an example, just right after this, perhaps we would have entered a buy trade, and then a good place to set your stop loss is below the swing low, which could be around here. And then as for your exit signal, you can just wait for an opposing cross to happen. As we can see, as price got to the overbought level and as a bearish crossover happened, we would have just exited our trade right around here. And one thing I love about the stochastic oscillator is that if you are a kind of person that likes to pick trades, you can be swinging trades from the oversold to the overbought and back to the oversold and then back to the overbought and then back to the oversold. So the stochastic oscillator permits traders to do that. So if you are a scalper, perhaps you can try that out on the 15 minutes time frame or maybe the 5 minutes time frame. But as a day trader or as a swing trader, it will take you longer period of time for the price to move from the oversold to the overbought. Like for example, this was around 8 August and it took about 14 days, about 2 weeks before the price began to reverse. So depending on the kind of trader you are, you will know what time frame to use your stochastic oscillators on. Now, for sell signals, it is just the opposite of the buy signals, right? When you have the stochastic oscillators in the overbought level, in the overbought region, and you see a bearish crossover when the main line crosses below the signal line and both lines point downwards, that indicates a sell signal. And you can see that price reacted accordingly as the price began to decline right after the bearish crossover. And then you can decide to set your stop loss just right above the swing high, and then you can use the opposing signal as your exit, right? You can see that right after the stochastic got into the oversold level and as a bullish crossover began to happen, you can see that the price reacted accordingly. So just know that the stochastic oscillator tells you when an asset has been buying for too long and could possibly reverse, and it also tells you when an asset has been selling for too long and could possibly reverse. So you can use the stochastic oscillator as an important trading tool in your arsenal to know or to gauge the momentum of a bullish move and of a sell move, right? It can help you to make more informed trading decisions. Okay, so you can also decide to use the stochastic oscillators alongside other indicators such as the moving average just to add to confirmation, right? Just for extra confirmations, you can decide to add your moving averages, or you can decide to also use trend lines. If you want to use trend lines, for example, maybe after you have indicated or you have found a bullish signal here, you might want to just check if it coincides with, and this is perfect, this is just perfect. You can see that right after the bullish signal formed here, at the exact same point, the trend line indicates that the price is about to reverse, continuing back upwards. So you can combine the stochastic oscillators with trend lines or moving averages or any other indicator of your choice. So that is it for using the stochastic oscillators to identify good trading opportunities. I hope you found this video insightful. Kindly like, subscribe, and hit on the notification bell to get updated on further videos. Cheers, guys, and happy trading.